Hello traders, Gary Wagner here. It is approximately 11 o'clock in Honolulu, 5 o'clock in New York on Friday, last day of May 30th, 2025, and this is the evening report for gold and silver, our weekend review. Precious metals exhibit a mixed performance this month, with a rise in spot gold and a decline in gold futures. Today, June gold encountered a significant headwind, closing down by $27 or 0.84%, extending the weekly losses to approximately $71. Gold has absolutely been trading under pressure today, with June gold declining by $25.70. That's a net decline of 0.78%, taking a troy ounce to $3,289.40. That is on a daily basis. On a weekly basis, the decline is $68.30. We can see that right here. What is most significant as we look at this chart is that we have had a series of lower highs followed by higher lows. That, traders, is a compression triangle. It is a scenario in which the range is contracting. As a technical trader, we look to see how it reacts to the apex. Typically, a market will break out to the prevalent trend direction, which is obviously up, which would look for sideways and then a solid breakout to the upside. Although we could easily see gold break out to the downside or sell off. If in fact we are correct and we do see gold break to the upside, my realistic target would be around $3,600. That is a 0.618% extension of the range from 2968 to just above $3,500, with an absolute target of about $3,800, which at this point I believe would be not that realistic. But traders, I have been completely surprised at the overall performance of gold this year. Inasmuch as we have identified a compression triangle, a potential bull breakout, I also have to acknowledge that I see signs of gold getting tired and exceptionally overbought, considering that it's traded to an all-time record high back at the end of April, just above 3,500, and we have seen 3,500 move to a low of 3,150. That's a pretty large price swing. The fact that it is sitting at a very critical area, the 38.2% Fibonacci retracement at 3321, I believe that we could see further downside. However, I believe that that downside would be limited to the 50-day moving average, which is drawn currently in green, taking gold to about $3,264. We remain flat with no active trades as we await the dust to settle on this most recent price decline in gold this week.
Just as gold futures monthly candle printed out as a doji after 5 months of green candles, we had the inverse happen in the dollar. Looking at this monthly chart of the US dollar index, we can see that this month's lows match up quite precisely with previously respected support levels. What that could signal is that the dollar may have found support and could be moving higher from here. Looking at silver, we did see a slight decline of around 1% this week. For the day, the decline was around 1% as well, showing us that this entire week has been within a very narrow trading range. One thing that posts well for silver bulls is how it managed to hold above the 50-day moving average. It managed to hold above its 50-day simple moving average for almost its entire week. It dipped a little bit below it on Wednesday, but we had our close just around the 50-day simple moving average, and although technically it is a little bit below it, I am still going to label this as support. Beneath this level is our 200-day moving average at 3250. And we have yet to get a breakout of our Bollinger Bands. We are still in the upper half of the range. We have yet to get our breakout. I still believe that silver will break to the upside when it does have its increase in volatility. However, that might take some time as summer trading has now entered into the markets.
This has been Gary Wagner,
And Joseph Wagner.
wishing you as always good trading.
We'll talk to you on Monday for our next video report.
Bye-bye.